Hi everybody, it's Wednesday, October 22nd, 2025. We'll start with our headline, Bullish, Exhaustion. We have mixed signals whether or not we are in fear mode. Today, the VIX shot above 20 and then closed back below 20. The CNN Fear and Greed Index dropped further into fear mode, verging on extreme fear. This is because a good amount of that gauge is relying on momentum. So when you have higher highs, higher lows, higher highs, higher lows, and you don't have that so much, that's one of the reasons you can get further in fear, despite being a stone throw away from literally all-time highs in the S&P 500. Now, the reason I'm seeing some bullish exhaustion here is just because, just on a day-to-day basis, we've been trying to see if we can close above the Friday, October 10th, ginormous red candle to the downside. What I wanted to see if we were going to get bullish again was to perhaps be like fighting at this level to go higher, but instead it's sort of acting as a blow off top. We went up to it and now we're getting rejected. Intraday looked like completely straight down and recovered, but only about 50% of today's red candle, suggesting the bulls aren't even fighting anymore. We're not fighting, we're not pushing, pounding on this level to go higher. Now this looks more like a blow off top, looks more like we're headed back down to whatever short-term moving averages you want to put on there. Additionally, Bitcoin has been sort of the leader of risk assets, leader of stocks, leader of global liquidity, much further away from its all-time highs, giving more credence to the idea that we're verging on extreme fear across markets. Also, just a little bit of trendline analysis. This yellow line representing obvious support for many candles broke on October 16th, Thursday, and we've been retesting it. We tried on Tuesday to break above it. I was talking about this on yesterday's show. While I was recording, we were actually above the line. We ended up closing much lower and then continuing further down as of this recording right now. This does not look like a bullish chart to me. Additionally, in the IWM Russell 2000, some people refer to this being sort of a good bellwether of the real economy because it's smaller companies. The notable piece I want to suggest right here is these bars down here are volume. So how many shares are being traded every day. When it's higher, it means more people are trading shares. So when you have volume pick up greatly on big down days, and then sort of go down on up days. And then as we have the bigger days down, we have volume increasing. This is a green bar, but this is actually falling in price, as you can see here. So we're going up into falling prices, and then the price goes up and the volume falls off. The price goes flat, the volume falls off. And then today, what happens? We have a larger move down and volume again picking up. Just another piece adding to the idea that, the fear is here. I've been noting also on many shows, and this is a piece of the Fear and Greed Index on CNN, the put to call ratio. I've been noting how unusually low it has been, suggesting not many people have puts, and that has been rising, though, to the point where CNN considers us to be in extreme fear mode because of the rate of the rise of puts. So people are finally getting further into puts or further out of calls, however you want to see it. Not a ton of charts to talk about today, so I'm just going to get through all of them right now. Next one is the U.S. 10-year Treasury note yield dropped again by 1 basis point, finding a new low again since that we haven't seen since that April quick dip again, and not previously seen for a year before that. So sort of new lows in the 10-year Treasury note yield. We also had a very, very strong 20-year bond auction today. Only 10% absorbed by the primary dealers, bid to cover over 2.5 at 2.73. Sometimes falling rates can, give a boost to stocks. We're not seeing that right now. And this is all while we're expecting a cut in, a week? Gold didn't do much interesting today, but we have to talk about it since it's been going kind of wild lately. Tuesday's close made sense as it was part of a parallel that I had found that connected to the top of April and these bottoms here. But I'm not seeing where the trend line support is here. It just looks like it's going to be falling further. I mean, maybe we're getting a little bit of support from this area here. It wouldn't be hard to imagine this turning into sort of a head and shoulders top with the shoulder being here, head here, maybe something like that. Or, hey, you know what? Let's give the bulls a chance. Maybe this is just crazily oversold and it'll just pop straight back up. Maybe gold will go up 10% tomorrow. I mean, those large moves in gold, it's almost like gold's been acting like a meme coin. And if it acts like a duck, well, anyway, moving on to community topics. What moves, if any, did you make today? Robschild does nothing, sits on hands. I should clarify about the gold thing. Gold is obviously not a meme coin, but when you have valuations that are so incredibly stretched, things can act like they're a meme coin, including, multi-trillion-dollar companies. This is what happens in bubbles. Anyway, coming up, economic data still in limbo. Second longest federal government shutdown in history, apparently it is right now. Even though some people like Hassan says, hey, it might end this week. Maybe he knows something that the rest of us don't. I came across an article saying something about food stamps perhaps being paused if they continue. That could get things moving if that's true. But, again, I'm not going to get into any of that. Anyway, yeah, we're still waiting for initial continued jobless claims, which we're not going to currently see tomorrow. It would be wonderful to see the past 2 weeks of these numbers. We're not going to get them, neither the employment and unemployment report that we missed, but we may still have tariff updates. Who knows on that front? And then Friday, CPI. We will have CPI coming out on Friday. So I'm not expecting much from the CPI report. I think it'll be a nothing burger event, but it could become a huge event. I don't know. We'll see. Imagine CPI is like through the roof and the Fed funds switches to no cut for this month. That would be interesting. Anyway, thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the crystal ball ratings. And see my website. Link in the description to read through my daily reminders, macro reviews, portfolio explained, and Stock Research Center. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching and see you next time. Robschild.